Hey, hey everyone. This is yours truly, Warren Howe and Shafiq. We are
Yep.
back with another live. Yep. Yeah, so basically today will be quite exciting. We'll be talking about stock screeners. Fundamentally, technically, what are the tools we use? What is happening in the market right now? A little bit. How was our trade performances and whatnot? But before that, you guys know the drill. Appreciate if you guys can this video, share with your friends, share with your family, because stock screener is actually a very important component when it comes to investing before we enter, and this is our ways to actually sharpen our thesis. So yeah, like it, put a heart, smash that heart button, share the link, and comment hashtag live if you're here, so that we know that you guys are here actually. And for those that are watching on replay, hashtag replay. So let's get to it. Freak, it has been a
Yo,
very
quite a time.
let's talk about the market a little bit, like 5 minutes.
Oh,
So
okay.
5 minutes, 5 minutes. I think the market has been very, very interesting. It was like huge. We had like a rough 4 months. It was actually quite disappointing that we couldn't go live last week. Actually, to be frank, I really wanted to go
Yeah,
live to update on this, and we were excited because we actually bought on the dip. We bought on the dip. We made some good trades, nice trades. Our Discord community made some nice trades. Like literally every 2 days, there was like a post on our screenshot profits channel, which we were very happy. But let's talk about the market a little bit. So it has been like a huge sell-off for tech, especially like huge. Like from the top, DNO is still negative 19% or something like that. But it was like a heavy 35. Gene Tech was like a heavy 50 from the highs. Now
yeah,
it's like I think negative 19 or so or something like that. So it was a huge downtrend, and then suddenly like immediately like a V shape up. So, what do you
yeah,
think about that, Fig? You want to comment a little bit about that first?
yeah. I think that basically in trading, right, being in the market, we basically need to be patient, lah, right? So those who in this 4 months they already give up, being in the market, they probably miss this opportunity, the golden opportunity to buy the pullback, buy the when market is recover again, right? The bull rally is coming in. They probably missing that, right? So that's why you need to be patient in the market. We wait for the time to take action. And yeah, I think we already discussed previously how to find the reversal. We mentioned about FTD, right? I believe we have that session last time, right?
Yes.
And do you guys know that we spot FTD, and since that the price, I mean the market's on bullish rally. So we're lucky to have that. We're lucky to be consistent in the market. But being downtrend in 4 months is very, very, very tough things, especially for full-time trader investor, right? We need to deal with our emotion correctly and be consistent with whatever we do, right? Keep researching on good potential business to invest. Keep looking for potential reversal or something like that. So we basically need to just do our works and maintain our emotion, keep communication with community that you have in Sifu, within your surrounding circle and whatnot. So I think that is very experience that we have go through, right? These 4 months.
Okay, so that's a very good point. That's a very good point. The thing I want to mention is that, number one, the markets have been very, very brutal, right? And I'm trying to say with a serious face because it was crazy, lah. Okay, it's really, really crazy. Okay, because why I know the fear index and the VIX was more than 30, right? The VIX, which is the volatility index, the fear index was like max, like maybe I thought it was not maximum yet, but it was actually very bad, right? And then the Nasdaq hit a bear market, so it was really bad. So I mean, why am I saying this is because people who held and just started investing and trading since 2021 they lost like 50% of their portfolios. If they're high growth, it'll be 40%, high growth be 30%. So why am I saying this is because this is like mindset, emotions must be controlled. This is like that's why I wanted to go live last week, seriously, because I wanted to talk about this. And now everyone's happy, right? Everything's going back up, right? But what I want to say is that this stock market is not for those who can't tahan volatility. That's what I can say. Okay, seriously, man. Like I'm close to a YouTuber. His name is called Matthew Ho. This will be in our YouTube also, so hopefully I don't want to talk too much about it, but I got on a live with him, and he actually asked me to meet because he wanted to ask me on some things. He's working on something. So as an investor, as a trader, what do I do? So I just gave him some little tips and whatnot. But he actually quit YouTube. He quit his not quit, but he wanted to be more relaxed. He wanted to be more on the sidelines. YouTube, Discord, YouTuber. I'm a coach on some Discord platforms. They're also going slow. This is like everywhere. Okay, bad news because of the market's down. Everything's down. So why am I saying this? Is because especially the YouTuber, he actually started since 2020, and that was the time when the stock market was like booming, right? So why I want to say this is because people who have not been investing for like more than 3 years, they would, or actually not 3 years, 5 years. If you have been investing for 5 years, at least you would have went through the 2018 minor correction of the US trade war, and that was quite brutal also, right? Like 30%, not mistaken, from the highs. But why am I saying this is because if you can't tahan the volatility, if you can't tahan if you can't take the emotion and just panic sell like what Meet Kevin did, then this game is not for you, right? It's not for you because you might as well just buy indexes and buy, just put in unit trust or, FD. Seriously. And it's a tough game. It's a tough game, right? People thought that there's a euphoria of, I can make profit from 2020 so easily. I can just be, selling courses, or I can just profit a lot from GME, AMC, and I can be rich and, I can retire. That doesn't work that way. You know what I mean? So we just have to be very cautious. And we are also very fortunate. Our personal portfolio, public portfolio, is actually down. It used to be down 25%. Now it's down 12% because it recovered. But also, we also made some hedging plays, and Bursa sort of we bought on the dip, right? I'm not trying to brag, but I'm trying to say that we, in times like these, especially, and you spot on, you said it, Fik, you said that we need to talk with people. We need to talk with community. We need to be in a community. You know, Sifu is here, right? You can talk with Sifu members. You can talk about, you know, Telegram groups, whatever. Our Discord is free, by the way. You can actually come in and talk with us. And we specifically have like a mental model channel that I can even share with you right now, actually. Mental model channel so that we can, you know, just how can I share my screen? Share. I don't know how much overall screen, but okay. Yeah, sorry. Yeah, so we basically have like a mental model channel, and just we are saying like, okay, when times are down, what do we do? We don't just panic sell, we build convictions. And this is the time where we build convictions in a heavy, choppy market, right? So yeah, that's what we want to say. And I don't want to take too much time on that, but yeah. So hi Anthony, good evening. Abing, everyone, good evening. Let's jump to it, right? Let's talk about stock screeners. And first of all, now I can share my Google screen. Not my. Sorry guys, I should make this a different tab, and I can share my screen window. Oh, okay, it wasn't in my tab. That's why. Sorry, just a quick one. This is actually a snapshot from for our Discord group. This is the mental model page. So you know, when I share like interest rates normally is bullish for stocks. Sometimes I'll just share on what people are talking about, quotes from intelligent investor, Mark Minervini, which is an awesome, he's a legendary trader. Snippets from Peter Lynch, right? I'll summarize shit, all these sort of things now, which is good for the community, all these things. But anyway, let me share my screen right now on what I want to say. Okay, so now first of all, when it comes to stock screening, there are basically tools that we use, right? Resources, websites, and we'll be sharing a couple of websites later. Number one, we can actually use Sifu website as a screener, which is cool, right? So let's say we can start with, and I'm going to do the fundamental side on screening. Then later we can actually end, like, we're literally going to do like a FATA screening process, A to Z, right? Well, not really A because there's much more to it, but just the numbers, and then Fig will look at it in his TA screening. Then we can actually set whether or not it should be an entry, exit, whatnot. Okay. Now, let's start with Sifu's website stock screening. So let's say I like the tech sector. Is one of the more interesting sectors in Malaysia. So this is all Bursa, by the way. So let me click technology, and there'll be a bunch, right? Obviously, load more. Then I can go to financial data. I look at let's see. I want revenue growth, right? I want revenue growth for more than 25%. Okay, then suddenly this streamlines to this few, and then I want profit growth, profit growth year on year to be more than 25% as well. Okay, so this is a good screening because especially actually during another sell-off, and there will be another sell-off, I'm pretty sure this year, like a pullback or healthy correction. I think this will be the time that really, and this is actually a little bit related to what we talked about just now, because what I want to say is that, okay, when all the prices are going down like mad, what do we ask ourselves, really? You know what I mean? Like, that's where fundamentals will give you that cushion, because what we told with our community is that DNO is cheap as shit. Okay, DNO, seriously, we bought on the dip. I regretted not buying was that warrants, which Shafiq always does. Shafiq queued on a warrant, he couldn't match it in Flu, he didn't queue in again. Then we, it was a potential 180%, but we didn't profit. I wished I profited. Oh my god, like we whacked in like 50k, 30k. Imagine 150% and 180% of 50k. That's like my whole year expenses is done. But anyway, so yeah, I regret not going to warrants. But eventually we went into Gene Tech, we went into DNO, we went into Emilus, right? And we were fortunate. Oh, MPI, which we're going to talk about. But then, okay, so let's get to it again. So we got three screenings so far. We got sector, revenue growth, profit growth, more than 25%. And I want to check on the profitability. So these are the companies that, let's say, oh, by the way, year-on-year revenue growth that means, more than 25% year-on-year, and profit is, profitability is more than 25% increase. Then we got net profit, let's say more than 15%. So then it filters down to this much. Now, obviously, when it comes to investing, there's a lot of metrics. There's a lot of requirements that we can have. So what I want to say about screening is that you can have your own screening. You don't have to follow this, by the way, right? We'll be sharing with you another valuable sort of screening that Joel Greenblatt does. So stay tuned. But what I want to say is that we all have our criteria. So based on my understanding of the Malaysian market, I look at earnings growth. I do look at balance sheet as well. But for tech, normally, there will be higher margins. Is tech, right? Better balance sheet because low capital intensity, all these things. This is already like sort of set. So I just filter down again into earnings growth and profitability as long as it's more than me. Now you can have a better screen and you can be like, okay, 15% is not enough. I want 20, right? So if you go 20, then it'll go back down to, all these, right? So let's say 15 anyway, and it'll bring us down to MPI, Amelus, Viz, Inari, JF Tech, these big boys. Okay. Now let's pick a few from here, right, Fig? Let's pick Amelus, MPI,
Yep.
and JF Tech. Can we do 3?
To screen in, so to study the TA.
Yeah. So my part for
Sure.
Bursa is done, unless I can just put like valuation. So valuation can be more than maybe 15. Then a couple will come out. Okay, that's good. I mean, it's more. All right, it's more than 15. So let's say between 10 and 15. Let's say none is found. Okay, because the prices went up. So, by the way, in a huge downturn market, we can actually use Seafood's platform and we can do valuation and we can say, okay, if these fulfill the criteria of profit growth and earnings growth and has a low PE, and especially in tech, it's like a no-brainer. Now, of course, D&O didn't reach to 10 and 15 now. I wish it did, but it didn't. But we can maybe put 15, 20, 25. Let's see. Okay, MPI still comes up, right? Which is good. Because in my opinion, when it comes to Bursa Tech, they still have that valuation premium because, there's no Salesforce here. There's no Palantir here. There's, whatever. But yeah, so maybe we can take MPI and what do you want to do? You want to MPI and Viz first, or I think that'd be good. MPI and Viz, yeah. MPI first. Now, I stop my sharing, and it's on to you.
Share my screen. All right. So this is MPI. MPI and what? Viz.
Let's do Viz, yeah.
Viz.
And by the way, guys, if you guys want us to do anything, just let me know in the the chats. Let us know in the chats.
Okay, so this counter already run out, but the interesting thing is about this counter is the regression trend is very low, meaning that the volatility at the moment is still low, right? Provided that it's still maintained above this, we probably won't see the regression yet, right? So the important part, right? If you want to really get this you how to say, to really capitalize the potential profit from MPI, actually you need to buy at low, right? So that's why it's very important to do your study even in bearish market, because during bearish market, for example, we found MPI, all these things, right? And we keep monitoring a potential entry, right? So at the moment, I think it's quite risky already, but a good entry price, of course, when it the catching the knife over here, or maybe a retracement over here. So all of this is very, very, very easily recognized by TA actually, right? Because here, for example, you can see like Morningstar candle. After that, the price keep going up. So all of this is, again, it goes back to how ready you are with your homework, which is to screen the counter and be patient and look for opportunity to entry, right? So this is MPI. For now, I think it's quite risky lah, right? Not quite risky because now the volatility of this trend range is low, meaning that we might see one huge retracement, but the problem is we don't know when, right? And this is also V-shaped recovery, right? So this V-shaped recovery means that market immediately, market is in panic, sell. But when they realize that market is, come back bullish, they they straight away buy. It means that people or the investor never lost their confidence in this counter, right? So that is like kind of emotion that we can read from this chart MPI. Next one is what this.
Yeah, this.
Yeah, this also showing the same pattern, right? But now it's still on downtrend where we can draw our trend line here, right? Okay, so this is the downtrend line of this, and probably when it touch the resistance, it may drop again, create a retracement, which is I think will be very good because this is possibly inverse head and shoulder pattern. So provided that it retrace and creating a higher low, right? I think that is good time to enter this position, right? So yeah, this is VS lah, right? Same story. You need to keep monitor. You need to keep being ready in the market. Know what to buy when the correct time is come. So yeah, that is MPI and VS.
Awesome. So, my turn to share the screen. Just a little bit on somebody joined our Discord, which is great. Awesome, man. Sub boy. So hopefully you guys from Sifu who are watching now, join the Discord. It's free. We can talk more there. There's mental models. There's public. We motivate each other, whatnot, right? But I want to share something which is sort of like a so our screenshot profits page, and we were fortunate enough to actually get MPI. Where was it? No, I think it was this. Sorry. MPI. So we made like 37.5% on profit on MPI warrants, which is actually done by FIG. It was a trading, and like I said, I wished I went into the warrants, but this MPI is one of them. So yeah, this is good. I was down 35% on Gene Tech, and I bought on the dip, and now it's profitable. So very fortunate. So yeah, this is us. Now.
Yep.
Let me share my screen on Sifu. Okay, so we were doing this on Bursa, which we can actually do on Sifu Screener. I can admit actually for Bursa Malaysian stocks, I hardly use screening tools. I look at forward PE, and the question when there's a huge dump in the stock price on any stock, whether it's US or whatever, I'll always ask, what will the forward PEs be, and how will the cash flows be, and how's the debt going to be? Like, how basically will the fundamentals and the earnings growth continue regardless of all the macroeconomics, right, happening? If that's better, I will buy on a dip. It's as simple as that, right? It's as simple as that. That's all we got to know for when it comes to fundamentals. So I calculate manually. That's my way. But just to share with you, this is actually a very good tool on Seafood that we can, okay, if there's another dip and another pullback, okay, let's just say, we want to be more stress tests, right? You want to be PE between this and this. Okay, then MPI will come out, right? So these are things to be used. But I want to share with you quickly on basically this slideshow. And this is where we reveal sort of other screeners more deeper into fundamentals. Okay. So by the way, guys, I should have said this before. We are not a financial advisor. We share our experience and hopefully it helps. Now, question is, guys, you guys are here watching us live. Appreciate it. Comment on the chats right now. How do you screen your stocks? Do you even screen your stocks? Right? What resources do you use? Do you use, I don't know, FinViz, or what? How do you screen your Bursa stocks? Is it KLAC screener? How do you screen your US stocks? Right, share with us, and just it's good to know. And this saying from Joel Greenblatt, he's saying that if you spend your energies looking for and analyzing situations not closely followed by other informed investors, your chance of finding bargains increases like crazy. And that's true, because we don't want to look at the radar where everyone is already looking at, right? We want to look at other companies that is not looking at, especially Wall Street. And that's where we can actually get more gains if provided your screening and their earnings are strong. And this was said by Joel Greenblatt. This guy is a goat, by the way. You want to talk about fundamentals and value investing, this guy's the man. So according to him, his magic formula investing strategy has generated annual returns of 30%. Annual returns of 30%, and this is actually relative to what we said at the beginning. People who profited, like, they grew 100K to 1 mil or something like that, which is great, very good, fucking good, obviously. But we need to see investing is a marathon, right? We are investing for our FU money, what we preach, our retirement money. So it's actually for the long run. And the key idea to know is that, can you consistently do that over a year-over-year period? This is what people don't understand. They think that it's a overnight riches, and obviously we want to be a multi-millionaire in the night, but that's not possible. So it's a long game, right? That's what people don't understand. They jump in and they get shortcuts. So that's not what we want. So Joel Greenblatt, managing like billions, is earning annual returns of 30%. That's just insane, right? That's like Peter Lynch, level. So though they differ in the calculations from the strategy, a number of independent researchers have found that the magical formula investing approach has appeared to show good results when backtested compared to the S&P. Now, the first thing I want to say, there's no such thing as a magic formula, okay? Because there's none. I mean, I can share with you everything here, and it might not even work for you. So what I'm trying to say is, understand the situation, right? Like, understand the situation, know your own way of investing, know your qualitative analysis and what are the stocks that you're competent in, then go there. Okay, there's no such thing as magic formula. That's number one, right? So let's do it. This is the formula for the screener. Ensure you exclude. So this is what Joel Greenblatt does. He excludes any financial companies, any utility companies in his buying process. So why? Because financial is very, very cyclical. If a recession comes, then you're probably GG already. More than other stocks. Okay, utilities, and they have no growth. I mean, the growth prospects are not really that huge. But obviously they're a safer play because banks in theory won't go bankrupt. So I'm pretty much I know Joel Greenblatt is because I know why he didn't exclude these is because he excludes these is because he doesn't want to obviously get into the risk of being too cyclical and being too safe and not having growth at the same time, and the earnings is sort of capped, right? So if it's pegged to interest rates, so interest rates go higher, they get higher profitability, and utility stocks is let's face it, utility stocks is utility stocks. Okay, I don't get why people buy it. If let's say during a recession or downturn, then obviously it's a good hedge, but it is what it is. So that's number one. Number two,
and also hold on there, let me add a little bit. And also another reason, because for bank there's another way of evaluate for bank counter. There's another way of evaluating bank counter, because they simply, it's not like what I said, it's not the same kind of business like others. So that is one of other reason why he exclude from his screener.
That's true. That's true. So number two, calculate each other's company's earnings yield, right? So EY, what is earnings yield? So basically earnings yield is earnings before interest and taxes, which is your operating income, divided by your enterprise value. So enterprise value is a better representation of market cap. It's basically market cap. You add in the debt and you minus the cash on hand that the company has. The concept is because if you were to buy a company right now, you would also take on the debt. You would also minus the cash left with it, right? You also take the cash to pay off the debt. So what is the net value that is trading for? And that's enterprise value. If you take that, you take the operating income divided by how much it is actually worth, you will get the earnings yield. Obviously, the higher, the better. The purpose is actually to tell us how good of a profit machine this company is, right, in terms of earning. So, if it's 15%, if it's 20%, it's awesome, right? That is number 2. Number 3 is calculate each company's return on capital. So every company they invest, they invest in fixed assets, they invest in their PPEs, right? Property, plant, and equipment. They invest in, they have working capital, all these sort of things. So ROC is basically the same concept. How profitable is this company based on the capital that this company generates, right? Or has. So it's the EBIT, operating income, divided by net fixed assets. And this is all located in the balance sheet. We can all look at that. We can actually work out quickly what's the working capital as well. We take current assets minus current liabilities. How much is that net figure that I can actually work with and roll with for the next year? And that is net working capital, right? So obviously the higher better, because it tells us that this company is good in utilizing and generating earnings from the capital they have. It's as simple as that, right? So 4 is rank selected companies by highest earnings yield. So this is something that we can actually use ROIC and well, there's no earnings yield for this screener. So I'm going to share with you a screener that we use also on FinViz. It's called FinViz. But they don't really have Greenblatt sort of screener. So whether we like it or not, I think Bloomberg Terminal has it. But we, sometimes I do it manually because Bloomberg Terminal is too expensive. We got resources to actually use to get it, but that it is what it is. So yeah, rank it all. Let's say your whole portfolio right now in 10 stocks. And why does he focus on earnings? Earnings is because that's like the blood rush of the company, right? A company, the way it is valued, the way that it demands a better premium and valuation in the market is from earnings, right? Earnings growth, sales growth, how well they can generate. So this is why. So I think that this is a very good, exercise for all of our portfolios, especially in the downturn market. This is the time to be just fucking doing this thesis, piling onto the numbers, crunching the numbers, and doing stress tests, and say, okay, this is how we can limit and streamline out of these 10 stocks, right? This will really know your keepers, right? So I have a client, like seriously, I have a client that is very unfortunate. She's like losing 50%, and the worst thing is that she lost 50%. It's not unrealized, and I'm doing everything I can to help her back. But it was like sort of, she went in heavy. She realized it because she panicked, right? You see all the stocks going down. But why am I sharing this is because this game is not as fun when shit hits the fan. It's not so fun anymore. But this is where everything comes in, right? When everything goes down, we build thesis, we build stronger convictions, and she has 28 stocks. So I told her, okay, why not we streamline based on screeners that we can have based on our own criteria, and that will really tell us what to cut, right? We want to get from margin to 30% cash or 20% cash. We need to streamline. So this is one way, right? We can use this way and can streamline because it will tell you that, okay, it's not profitable. In this market right now, it's shit. They have no growth prospects. They have no optionality. Okay, I'm out, right? But if it's unprofitable, the key thing is when are they going to be profitable and how long, right? Because I can't wait 3 years, I can't wait 2 years. So what is the game plan? If you don't like it, then it's good. If you like it because, it's a sexy company, has a huge market fit or whatnot, then okay, you can keep it. But should we reduce the exposure? Now, obviously, that's time for another session. What I'm trying to ultimately say is that we need to do these things to, funnel it down, right? Filter it down. So do that. And so this is very interesting thing. Number 5, buy 2 to 3. So after you filter down, buy 2 to 3 positions each month, okay, out of your top 20 to 30. You see, the reason why he's fucking getting annual returns of 30% is because he's piling back onto the winners. You see, he streamlines it. He, gives a stress test on it, especially no matter what the market is, right? He's still buying 2 to 3 positions each month, okay? Each month. That's the thing. Regardless of any price, we dollar cost average. Now, obviously, if your portfolio doesn't allow it, then you can keep cash. But if your portfolio allows it, and this works from, earning money, saving 15% of your income and just piling onto stocks or any other asset class that you know, believe will grow. In our definition is stocks, right? That's the best asset class. So buy 2 to 3 positions. Again, you don't have to do it, but that makes sense, right? We're piling on, we're compounding, and because we are looking way over the horizon. We're not looking for investing. We're not just looking at 2 years or 3 years. We're looking at 5 years, right? So repeat the process each year for a minimum of 5 to 10 years or more. Now think about it, right? I was having lunch with my fund manager friends, and we were eating our hearts out because the market was falling down, and some people are like sort of laughing, like people talk about long term, but when a bear market happens, they sell everything. Like, there's something to think about. It ties back to mental. Like, you talk about long term, but you're selling it. It's okay to trim because you're managing a portfolio, right? You need to raise cash. You sell 20% from the top. You trim it. You buy it back or whatever it is. That's a strategy. But if you sell all and you capitulate, it's going to be very painful. So that's just something that we should be mindful of. So for this, I only screen for those with average daily volume of at least 100k shares. Okay, that's one way. And another, so that's Joel Greenblatt. This is actually a sharing from Wedgwood Partners. Okay, they are one of the more successful money managers in US. They are quite legendary. They believe in a focused investment process approach. Investing is only 18 to 22 best of their, based on their criteria, companies in the world. So their story is they founded in 1988 with the goal of providing investors with a superior approach to management investing. It's basically a hedge fund, small one. So why Wedgwood? Because they use the edge. They think like business owners and best of breed businesses, long-term, multi-year, multi-cycle with horizon. That means they really understand the cycle and earnings growth, momentum, and whatnot, right? So investment process, believe profitability is the foundation for determining a business intrinsic value. As such, defensible peer lending profitability is a key element we look for when investing in companies. Sustained multi-cycle superior profitability is a rare attribute that considerably narrows down our investable universe. Okay, sorry. So before I continue, my way of investing is the approach of qualitative analysis over quantitative. So we can use all these metrics all we want. All we are talking about today so far is the numbers, okay? But in my opinion, that's where I focus on growth because, not only growth on earnings and numbers, I also focus on the optionality, whether or not they're actually, open and innovative enough, open-minded and innovative enough to really take care of their shareholders, take care of their products, take care of their clients, their consumers more than themselves. That is, key. So there's something that qualitative, you can't tell just by reading numbers. That's all I can say, right? Because if we use this, we'll be missing out on, Tesla, Square, Palantir, right? All these companies, which I personally think is amazing. So what I'm trying to give as a reminder is that obviously that's why investing is hard. That's why it requires hard work. You know what I mean? Like to make 20% in the market, 50% is like hours and hours of thesis, which is what we do in our groups, right? So again, join our Discord group, you'll know more, but this is what we do. That's just something I want to say it out. So the stringent equity screening process to measure past excellence is a good start to see which companies are sound, healthy enough to make it to the next round of deeper analysis. So their screening approach is ROE more than 25%. ROE is basically return on equity, right? Shareholders' equity is total assets minus total liabilities. We can actually see the net value of that company if they were to liquidate, all of their holdings, right? Take their properties, pay it off debt. What is the net, equity, right? That's shareholders' equity. If I was a shareholder in the company, that's how much I would get. That's the concept. So ROE, which is a very important sort of metric in the investing world, tells us how profitable this company is based on the equity that they have, right? And that, according to Wedgwood, is more than 25%. ROC, which is what we talked about for Joel Greenblatt as well, is more than 20%. Cash flow ROI, more than 15%. So cash flow ROI is basically operating cash flow divided by the capital employed, right? Total equity, we plus short-term debt, we plus the capital lease obligations. All this is found on the balance sheet, by the way, plus the long-term debt, right? So this is the capital that the company employs to actually, how much we can actually navigate, how much the company has in sort of total assets, that is basically employed to turn around the company or whatnot, right? So if obviously the higher the better. Cash flow, that means this indicates how strong the cash flow is and how strong the company is generating cash flows from the assets that they employ, right? Even with huge debt, even with short-term debt, how well is the company generating cash flows? Okay. Then we got EPS growth. That means how well the company can grow their earnings. And we got revenue growth, which is above 15% and above 12%. So I don't have a sort of screener for you that I only so far I know Ticker, I know Finviz when it comes to US companies, but these are that's why it's so hard to screen, right? I mean, these are sort of stringent indicators, but sometimes we just need to do shit manually, right? But this is a screening process nonetheless. So Wedgewood's investment process is the pyramid, where they begin with large cap growth, that the universe, which is 500 to 600 companies, the research universe, where they actually stream it down, and then Wedgwood criteria, and then only their portfolio, right? This is very tight, right? They screen a whole lot before deciding whether or not to click that buy, right? So there must be catalysts, there must be risk management. That means in relation to debt, in relation to the reward over risk, all these things, in relation to valuations, right? Portfolio construction. This is investing overall. Okay, so quest for excellence is that the companies must have really high barriers of entry, that no competitor can simply come in and destroy their moats, right? New entrants in the sector or industry is not as simple as that. Threat of substitutes, buying power, pricing power, especially very key, supplier power and whatnot. Yeah. So Wedgwood investment process basically foundation of 3 legs required to ensure stability. We got fundamental research, competitive advantage, growth, financial strength. We got risk management, we got valuation. Then these are the stools that will create that portfolio, right? So in the downturn market, these are the stools, regardless of the price, that fundamentals will give that cushion, right? So this is what Wedgwood does, and this is very good to know. I mean, again, like the question I've been asking, if you guys are having portfolios, you're serious in the game, you're serious of growing your wealth, you're serious of owning a very sexy business, regardless of the price, as though you're owning like a private, company, then do this, right? Do you guys have this? What is your screening process? Yeah. So yeah, these are the fundamental things I want to share, Fig.
Sure.
Yeah, that's what I want to share.
So let's continue with PA screening. All right.
Sure.
So we left until here, right? Okay. So in PA screening, right, there's a before we do any screening, we need to understand what we really looking for, right? So actually, if you guys notice what have been discussed all the way by Warren just now, each investor, they have their own like philosophy of how to invest, right? They have their own style how to invest. So each of them like have like a different strategy. Like for example, Greenblatt have a different strategy compared to Greenwood, compared to other investor, compared to Warren Buffett. So that is again, right? It is important to really understand your style, the reason why you need to have a clear goal, and how to reach that goal is very important. And from there, you can develop your own style, right? So Warren just now told you guys that even though he doing all the screening, right? At the end of the day, he still really put the importance of qualitative analysis, right? So yeah, right. So same to technical analysis, but for technical analysis, right, the aim is we need to understand what is the setup that we want to play, right? So like what kind of strategy or setup that we want to play. So I think I have mentioned this before, that there is basically 8 types of price movement and strategy that we can play in the market. This is the 8 price setup that we can see, cycling in the market. So from here, right, for each of these setup, we need to know what is the important core of the setup. For example, right, position trading, what important core is the trend, right? For swing trading, the important core is trend and also volatility. Rebound trading, what important is the volatility and also momentum, right? Pullback, you need to know the volatility, whether it's oversold or overbought, right? So all of these, each strategy or each setup have a very particular important core that we need to identify. Okay, so that's why when we do a screening, right, we need to know what kind of setup that we actually looking for. Okay, so just to share with everyone and those who are using TradingView as stock screener, I also using TradingView. So maybe this is something that we can share together, right? Right. So let's move with the first strategy. For example, position trading, where the importance is the trend. Okay. So, right. So the important is the trend. So when trend is important, right? You want. I already have the screener lah, so it's over here. So in a market where in a setup where trend is important, we want to make sure our screener, right, provide a important characteristic that really showing a good trending counter, right? So how to do the screener is actually depend on the understanding of technical analysis that you have, right? Sorry, this one I need to unclick. Right. So for uptrend, right, for example, to identify an uptrend, first I look at the average volume, then I look at the moving average. Obviously, this is the basics trend analysis that we did all along, like short moving average must cross long moving average, right? So that basis is actually really useful for us to find a trending stock, right? So that's why I set up, exponential moving average 10 below, above exponential moving average 20, moving average 50 above moving average 50, 200. Last price is above moving average 10, right? And yeah, all these are right. So moving average is very important to identify the trend, right? This is the basic sheet that I think most of the technical trader knows. Okay, so from there, right? What we need to do is we need to check one by one. We need to study one by one, right? A suitable setup that we really looking for, right? So we have this counter, and from there, right? My point is, before we having the screener, we already have a strategy or setup that we trying to play, right? And we set a screener that purposely try to look for that kind of setup and also price characteristic. Okay, so this is trending counter, for example. Okay, right, and this is also quite important, which is the combination of column. The column is over here, right? So I think the way I start the column is suitable for me, right? Because for me, when I want to day trading, when I want to short term trade, and even when I want to see if the momentum still strong or not, right? I want to check all of these criteria very easily, right? So I can sort by volume, I can sort by volume time price, I can sort by the float, right? The float, share float that is having in the market, so that I can visualize, right? How strong the momentum that can push us the counter further and further, something like that, right? So it again back to your understanding of technical analysis, but this is how I do my screening, right? To look for position trading. Okay, so just a little bit introduction. Position trading is basically we look for counter that showing a long-term uptrend, like this evergreen, right? So this is long-term uptrend. So the counter is doing moving like this, right? So from here on, we want to just need to identify whether this is a good entry or not, right? If we see there's a potential for this counter, we can always add in our watch list, right? So, and to keep monitor the counter. So yeah, that is basically for position trading, right? Next, we want to see momentum trading. Okay, so for momentum trading, what important is momentum, right? But the other important thing is also we want to make sure we're not missing out the momentum. We want to buy when the price characteristic that is showing the momentum is actually building up, right? So this is an example for momentum trading that I use, right? Volume must be above 1 million, exponential moving average above exponential moving average 10, stochastic RSI slow above, below RSI fast, relative strength index above 40, stochastic RSI fast above RSI slow, right? Is basically confirming this one, right? So by looking at this, right, we basically can find a counter that having a setup like Pro Lexus. Okay, so what I'm trying to looking for is basically counter that counter that the stochastic RSI is actually improving, right? And RSI is actually above 40 level. So when RSI is still 40 level, meaning that the counter still have a huge potential upside, right? So if you really look at this screener, actually it triggers from this level, right? It triggers from this level. So if we lucky enough, right, we spot this counter using the screener, we set maybe entry when it break out or something, right? This is kind of momentum play that you can get, right? This kind of momentum play that we actually looking for, right? Counter with strong momentum showing like very huge building up momentum and improving momentum. Okay, so this is just one example, right? Next is pullback trading. Okay, so for pullback trading, right, there's a two-way of pullback trading that we can do. First, we can look at potential for catching the knife, and also another way is we look at pullback for pullback, right? Pullback for pullback is basically the counter have a consistent trend, or you have like a good primary trend already, which is probably an uptrend, but doing a pullback. So this is what we're looking for in pullback play when looking at pullback. But catching the knife, normally we look at when market is downtrend, right? And in over panic, right? So this is actually what we did where we can discover opportunity to enter Genentech, opportunity to buy in DNO at the lowest bottom point, all these things. So the point is we need to understand the strategy in mind first, right, before we do the screener. Okay, let's go with the pullback trading, catching the knife first, right? So the theory of catching the knife, right, it must be oversold, it must be in panic market, and when we said that it must be oversold, it need to be oversold from different perspective. It need to be oversold from volatility, which we can look at Bollinger Band, right? For example, right, let's open our Genentech. Why we enter this counter? Why we think that, right, this is probably the bottom, right? Because if you really look at the if you really look at the counter, right, you look at the price that trade during this level, you know that it's below the Bollinger Band, right? Meaning that it's way oversold in volatility, right? So this is confirming our oversoldness in volatility. Next, we want to check whether momentum also oversold. So we look at RSI and stochastic RSI, for example. Both are showing that, RSI, Genentech is way oversold in the momentum. So it fit two criteria in momentum, it oversold from momentum, and also it oversold from volatility, right? So next thing is you just need to think that, all right, market is panicked, right? So when market is panicked because of certain reason, right, you need to, understand what happened to the market also. And you need to see whether it is, way illogical or not. My thinking when we spot this entry is basically, I'm thinking like, if the price drop more, right, this is like very illogical drop, right? And also from the point of view of catching the knife characteristic, already checked, the list already checked, right? Oversold in momentum, oversold in volatility, the volume is strong, and also is far from moving average 20. So all of these characteristics that we know, check the list, it's just matter of making our position, right? So yeah, and how I find this counter again, right? By looking at screening and also by knowing which counter to buy beforehand, right? So during the bad market, we already do our research, we do our study, right? There's a few counter in our mind that, all right, if market recover, this is counter that we want to buy because they're good fundamental. And it's simply logical because when bullish market coming in, right, it's simply logical because this is counter that people will chase first, right? A good fundamental counter. So yeah, that is for pullback catching the knife. Next, we look at pullback counter from trend pullback, right? This one trend pullback. I think this one wrong. I think I tertukar or something. Right, it's okay. But basically you can look at stochastic, right? Just now we look at stochastic RSI to identify building up momentum. But for this one, we can look at stochastic. The idea is stochastic, let's say counter like what? Counter like counter like what? Counter that is bullish. They say
Bullish?
DNO lah.
Okay.
They say DNO lah. I mean, I want to show counter that having a bullish uptrend like this, right? So this counter showing a primary trend uptrend, right? So each correction is actually important point for us to buy or pullback. So for us to identify the entry, we can look at stochastic. So in an uptrend counter, right, when stochastic is at the oversold, it is very anomaly. It's an anomaly position. So when stochastic showing oversold in an uptrend movement, it is actually a point to buy. Okay, so but when the price is downtrend, like at the moment, we normally can see the stochastic is on overbought region, right? But when is at oversold region, but when it's at overbought region, that is showing the counter is already at probably a high risk top like peak risk entry that we can do, right? So that's why last 2-3 days we deem the entry is very risky, so we wait for pullback, right? We wait for pullback. Hopefully it can building up the foundation for a higher high, higher low to continue the uptrend. But again, yeah, it relates back to your understanding of technical analysis to create your screener. Okay, so last point, right? How to do Fata screener, right? So to do Fata screener, right? Just now Warren already did his fundamental screening. So after Warren did his fundamental screening,
sorry, can I share my FinViz one real quick? My
Sure.
FinViz one.
Admin, please.
So this is FinViz. I'm not sure. Can you see the screen, Fig?
Yeah.
So this is FinViz, and you go to screener, and this is only for US based companies, by the way. So Fata basically will be like checking whether or not the earnings is good. And by the way, be careful of one asset impairments, or be careful of one-time earnings, for example, like income tax benefits or sale of an asset, and then realize that the profits, be careful of these one-time earnings. But that's why we have to do a manual check for all the companies. But when we come to FinViz, we can just simply type, okay, over 15% for EPS growth in the next 5 years. Sales growth was over 15% for the next 5 years. Return on equity with 25%, which is what we looked at just now. This is ROIC. The definition is here, and then over 20%. EPS growth next year over 20%. So if you click this, you go to fundamental, immediately these will pop up. We got Bio Delivery, NA Plus, Fortinet. Fortinet's a great company. Progeny, Revolve Group is a company that I used to sort of own last in 2020. So yeah, this is a screener that it's that we use as well when we want to combine FATA. But yeah, I just want to share this before I.
So after we find the fundamental counter, right? We check manually the business and whatnot. Then we put that all of them in a watch list. So what you can do is basically after you put them in watch list, it's matter of looking for potential entry, right? So there is where TA comes, right? That's where technical analysis comes. So let's say, right, you want to check, right, in this FATA watch list that we have at the moment, right? You want to see is there any pullback entry or not? Sorry, this pullback is wrong. I think I mess up the things. For example, momentum play, right? So you want to see whether the counter have momentum play or not, right? So what we can do is we click the watch list, click Control A to choose all, change the flag flag all of this counter in a bookmark. So for example, this one I use pink bookmark, right? After that, I click this one, right? So I change the bookmark to, so point is we want to only see is there any momentum play just from our watch list. You know what I mean? Right? This is how we do the things, right? So yeah, but market just opened, so everything gone already. But yeah, let's say uptrend, right? So this is the uptrend positioning counter that based on our watch list that we already filter down from fundamental. It's matter of looking for TA entry. So this is how we treat FATA play, right? So yeah, I think that basically summarizes everything. FATA screener.
Yes, sir. So again, appreciate you guys. It's already been an hour. Thank you for everyone for tuning in and commenting. Great, you guys are using KLC Screener. TradingView is awesome. Hello. Yeah, basically this is it. And again, if you're watching this replay, click hashtag replay so that you guys are here. We can actually have a good conversation. Join our Discord group. It's free. And yeah, that's all. That you want to say anything before you end, Fig?
Nothing. Just awesome, hopefully man. You enjoyed the session and learn something.
Yeah, so hopefully you guys learned something. Hopefully provided some value. Yeah, be careful in the markets. Be mindful of our portfolios and invest well, guys. See you. Bye-bye.
Join our Discord. All right.
Bye-bye.